What's going on, traders? Welcome back to the channel. Today's video is going to be about how to find your daily bias using only the 4-hour chart. This is going to be an easy approach because many of you cannot determine the next daily candle or your daily bias. This video will focus on using only the 4-hour to determine your bias. Now, starting with the introduction, this is the easiest way to determine your bias because we are using the fractal nature of the price section. If we can determine the direction of the next daily candle using the next day model or the phase of price delivery, the institutional order flow, the weekly profile, same we can do as for the 4-hour chart because it's an intraday traders. When we are trading 5-minute or 15-minute chart, all we need is the direction of the next 4-hour candle because it will give us that short-term bias to then align ourselves with that expansion. Starting with the first component, which is the institutional order flow. This will look like a repeating framework, but this is it. This is the truth. Many of you cannot determine institutional order flow and then try to trade every swing point in the market and then getting stopped out. So first you have to identify the institutional order flow. This is important, and for any bias, whether it is a daily or 4-hour, you have to identify the order flow. What is the price doing? Is it respecting the bullish PDRS? It is respecting bearish PDRS. Is it rejecting from all highs or lows? The next step, which is the phase of price delivery. Once you have determined that the price is trending in a certain direction, all you need is the phase of price delivery. If the price expanded previously, then you have to wait for a retracement towards your PDRA, the internal range liquidity, and then trade the expansion out of that. If the price is in the retracement phase, then all you have to do is wait for the SMT divergence inside that PDRA and then trade the expansion. If the price is consolidating, then you have to wait for either side of the range to be manipulated. Until then, you will sit on your hands because you cannot trade the expansion forever. You cannot get caught in the consolidation. And if it is reversing, then you have to identify the signatures, change instead of delivery, etc. To identify that reversal inside the PDRF. Now, this is a new topic, reversal at PDRS. When we are identifying the further price delivery, the institutional overflow, the next thing we gotta do is we have to determine whether the price is reversing its certain point of interest, its certain PDRF. So for that, we can use the MMXM's next day model or the T-Trace fractal model, which is when the candle 1 is reaching that point of interest and the candle 2 forms a reversal, a large wick, and SMT divergence will increase its probability, and then the candle 3 is expanding in the direction of the order flow. When the price is hitting your internal range liquidity, when the price is retracing towards your point of interest, you have to wait for these signatures. If the candle 2 is a reversal into expansion candle, it will be having a short wick. Short wick will lead to a large expansion out of that period. Then you can also trade the candle 2. Now revisiting the 4-hour profiles, actually the daily range comprises of 6 4-hour candles. All you have to do is wait for a reversal of a certain candle. This is actually copying the framework of the weekly and daily profiles. If this, then that. If the London candle is reversing, then the New York will expand. If the 6 a.m. reversing, the 10 a.m. will expand. If the 2 a.m. is reversing, the 6 a.m. and 10 a.m. will expand according to the next day model. Whole video guide, you can check that out later. And I will also be going over this in the chart later. Now the next component is the weekly candle formation in the weekly opening price. Determine whether the price is creating the high of the week first and then creating that swing point, that protected swing, then the candle will expand to the downside. The week open up, it doesn't have that wick, but we are closing below the series of up close candles that took the previous high. So that means this high is now protected high, and the weekly candle will expand to the downside. If the price is creating the low of the week first, then the rest of body of the candle will expand higher. If the price is creating the high of the week first, then the rest of the body of the candle will expand to the downside. Now the time frame alignment, if you are trading the 4-hour candle directly, then you can use the 4-hour to 15-minute time frame alignment, which is using my models framework. In the last video I mentioned that, and the new framework in this video I'll be covering is fractalizing the 4-hour bias into 1 hour to 5 minutes. So first let's go over all the component in the 4-hour to 15-minute, then we will go over the 1 hour to 5 minute, how to fractalize a single 4-hour candle. So starting with our first example, we are on the gold 4-hour chart. On the right side, we have the weekly candle. The previous week closed above the series of down close candles. A shift in the order flow, we shift from the bearish to bullish order flow. Now, in the previous week, we expanded, and then after large expansion, we had a consolidation phase. This is that range high, and this is the range low. Now, before continuing to the upside or the lower side, we need either side of the range to be manipulated. The new weekly candle open up, but we are inside this consolidation range still. We need that range high or range low manipulation. Now we have traded to the downside. Range low is manipulated. Now, if the price action is closing above the series of down close candles that took that range low, then we can assume a change instead of delivery and a shift and drop low once again. Now we have closed above the series of down close candles, and we are also having an SMT divergence right here at this swing point. Monday has created the low of the week, and the rest of the week will expand to the upside. Now the CPI day consolidated, and now on the Wednesday we are having that SMT divergence. 4 hour swing point SMT divergence at that swing point. Now we can trade that on the M15 chart. Now in this case the silver was a stronger pair, so we would trade that. On the right side, I have the 4 hour candle, the 18 and 22 met that opposing run, the 2M candle took the previous candle's low, and now we are having a change instead of delivery inside the 2M candle, and now we can trade the New York session as a continuation, London reversal inside the 2M candle, New York continuation. Now all we need is an opposing run to then trade it to the upside, or we can wait for the 6 a.m. candle's opening. Now in this case, this is not clear. We are not taking some relevant high or relevant low, but we have SMT divergence at this swing point right here. So we can trust the series of down close candles, and we can take our entry on that. So I'm entering on the next candle, my stop loss below the body low, targeting 2R. And simple as that. On the edge 30 news, we expanded to the upside. Now we have SMT divergence. On the gold, we haven't taken this low right here, and on the silver, we have manipulated this low, and we are sort of weaker. So that is our bullish SMT divergence. Now all we need is drop down to the 15-minute chart to trade that 15-minute model. Now what we can do is wait for the 6 a.m. candle to then align ourselves within that, because we are far from the entry price. And as you have noticed outside the kill zone, the price is just consolidating. Now we have manipulated this consolidation range low right here using that phase of price delivery. Now all we need is a closure above the series of down close candles that manipulated that consolidation range. Now we have closed above the down close candle, which took the consolidation range low, and we are closing very aggressively. But all we can do is take the next candle entry. My stop loss below the 50% up this order block. In this case, my risk to reward will be too low, so I would wait for a continuation order block or a propulsion block. Now the 10M candle opened up, created a small wick, closed above the down close candle, which is the signature of the continuation order block. Take my entry there, my stop loss below this low right here, and I will target just about 2R. And we have expanded to the upside beyond to our target. Now that we have covered the 4 hour to M15 entries, aligning that time frames, now we can also fractalize the 4 hour buys for the 1 hour to M5 entries, trading the market maker model from 1 hour to M5. So the idea behind that is there are 4 1 hour candles inside a single 4 hour candle. So we need the direction of the next 4 hour candle, and then we can trade the swing point formation inside that 4 hour candle on hourly chart, which is basically my model which I taught in my previous video. We have a bullish sentiment, a bullish order flow, the 2M candle reversal. This is the 6 a.m. opening. It is creating a small wick. Now we can see that 6 a.m. to 10 a.m. candle on the hourly chart. So here that 6 a.m. open, the first two candle made that opposing run. The 8M candle tapped into the fair value gap on the hourly chart with SMT divergence, and then we can trade it on the lower time frame. We are dividing the single 4 hour candle into 4 segments, 1 2 3 4. Now for the example of the 1 hour to M5 entries, how I use the 4 hour buys to then trade 1 hour to M5 entries on the gold futures today. So actually we had a 6 a.m. reversal. How do we know that this is a reversal? We expanded our week, open, low, high, close. So we have to create the other end of the weekly candle, which is actually a TGIF. You can check the AM trade video about this. We already are having a 6 a.m. reversal. We do not had any period to retrace off of, so I targeted this low right here, the current day low. Now I will mark this candle right here, and we will trade it on the 1 hour chart. There will be 4 1 hour candles inside this 6 a.m. to 10 a.m. 4 hour candle. Now dropping to the 1 hour chart, what do we have? We have a 6 a.m. reversal inside the 6 a.m. to 10 a.m. 4 hour candle. The first candle created that wick, so now we can assume that the next three candles will expand to the downside. All we need is a swing point, SMT divergence at that swing point, and then trading the 1 hour to M5 market maker model. Now with the next candle, we expanded lower. I didn't take any entry because we don't have SMT divergence yet, and I'm trading post at. Now with the 8 a.m. candle, as I've told you, kill zones are actually important because at the 8 a.m. we have manipulated that low once again on the silver, and we are creating SMT divergence with the goal right here. SMT divergence is these highs. So now we have a swing point with SMT divergence, and now I can trade it on the lower time frames. So on the 5-minute chart, as you can see, we have a series of up close candles, and we want a closure below that, then to take an entry to the downside, or we can use alternatively continuation order block. So what I did was I actually waited for a change instead of delivery. Now as you can see, the first candle inside the 4 hour candle was a reversal candle, 1 hour reversal, a change in state of delivery. Then we are trading inside the kill zone. So the 7 to 8 wasn't inside the kill zone. So we waited for the third candle inside that 4 hour candle. The third candle was from 8 a.m. to 9 a.m., which is providing that entry for us. And now the next candle we will be trading is the last candle of the 6 a.m. to 10 a.m. 4 hour candle, which is the 9 a.m. to 10 a.m. So we would wait for that, and we are having SMT divergence right here. Now we have closed below the series of up close candles into the SMT divergence. I can put my limit order here. In this case, this series is larger, so I will use the 50% of it and put my stop loss above it. We almost got stop out because of a small stop loss, but eventually we hit our target, and we expanded to these 4 hour lows, which I marked earlier. So now going back into the 4 hour chart, as you can see, what I did was I only used the 4 hour chart for my buys. Now for the next example, I will go over the Forex fair. So on the left side, I have the Euro USD 4 hour chart, and on the right side, I have the GBP USD daily chart. So we are in a bullish order flow because, as you can see, the market sentiment, we are trending to the upside, closure above the down close candles once again, and now we had a deep retracement. What we can see is we have failure swings all above, so we can target them as well. And as you can see from the daily opening, this is the Friday candle, open low, and we are having SMT divergence at the daily low. So it will be most likely the London reversal and the New York continuation. We took this low on the GBP, and we are creating SMT divergence on the EURUSD. Drop down to the 1 hour chart to then align 1 hour to M5 entries. We are also taking the previous candle's low on the 4 hour chart, that 1 a.m. to 5 a.m. candle. So there are 4 1 hour candles inside a single 4 hour candle. The first candle was a consolidation. The 2M candle made that opposing run to the downside. The 3M candle had that SMT divergence and took these lows right here, dropping down to the 5-minute chart. So here on the 5-minute chart, as you can see, we have a change in state of delivery. Down close candle took the short-term low and then closed above that. This is our change in state of delivery, and also we are having another SMT divergence at the 5-minute right here. Now all I can do is put my entry on the next candle, my stop loss below this low, and targeting the failure swings or the market maker model original consolidation, and eventually we hit our profit target. This will look hard to you, but actually it is easy because inside a single 4 hour candle there always are 4 1 hour candles. So keeping that in mind, we have to wait for the swing point formation, SMT divergence, and we have to find the buys for the next 4 hour candle, and we can trade the market maker models 1 hour to M5 and then 4 hour to M15. Hopefully you have learned something from this video. Thank you guys for watching, and let me know in the comment section what aspect of the price section are you struggling with, so I would make videos on that. Make sure to subscribe to the channel and like the video, and see you in the next one.